All right, let's talk about Braze, because what we just saw wasn't just another quarterly report. No, this was a pivotal moment, a real turning point where the entire story for this company seems to have shifted.
So boom, right out of the gate, the stock just explodes, up over 16%. The big question is, why? What did Wall Street suddenly see that sent this thing soaring? That's exactly what we're going to unpack right now, not just the what, but the why it's such a big deal.
So here's how we're going to break it all down. We'll start with the Q3 scorecard, then get into the AI growth engine that's powering things. After that, we'll look at their guidance and the key questions everyone's asking. We'll put the market's reaction into context, and then wrap it all up with our take in the next call. Okay, let's get into the Q3 scorecard. We're talking about the raw numbers here, the beat, and maybe a few things to keep an eye on. So check this out. The street was looking for revenue somewhere in the high 180s, and Braze came in at nearly $191 million. That's a solid beat, and it's up more than 25% from last year. And on the earnings side, their non-GAAP EPS was right on the money at 6 cents. You know, it's that 1-2 punch, beating on the top line while hitting your profit numbers, that really makes investors sit up and take notice.
But here's where the story gets really interesting. Take a look at profitability. While they still have a GAAP operating loss, the big news is that non-GAAP operating income was positive, over $5 million. This is huge. It's that shift from just growth at all costs to profitable growth. And they backed it up with almost $18 million in free cash flow. This isn't just a good quarter. This is what you call a major inflection point.
Okay, so the customer metrics. It's a bit of a mixed picture, to be honest. On one hand, they're killing it with the big fish. The number of customers spending over $500,000 a year, that's up a whopping 29%. That's fantastic. But on the other hand, we have dollar-based net retention, or NDR. That number slipped to 108%. Now that's still positive, but it's down from 113% a year ago. Management even called it out. It's the one key watch point in an otherwise stellar report. All right, so those are the numbers. But what's the story behind the numbers? Why is everyone so excited? Well, it really all comes down to one thing: their massive push into AI.
They're calling it a wave of innovation with their BrazeAI suite, and honestly, it's pretty impressive. You've got the BrazeAI Operator, which is all about speeding up how you create and analyze campaigns. Then there's the Agent Console, where you can build your own custom AI agents to crunch data and automate workflows. And maybe the coolest part is the Decisioning Studio, coming from their new OfferFit acquisition, that's all about self-optimizing personalization. This isn't just bolting on AI features. It's about making Braze the absolute brain, the central AI layer for a company's entire marketing stack.
And you really get a sense of their ambition from this quote by the CEO, Bill Magnuson. He says they want to help marketers get away from the drudge work of babysitting campaigns and instead become strategic conductors. I love that phrasing. It's not about replacing marketers. It's about empowering them, turning them into conductors of a powerful AI orchestra. That's a vision that gets people excited. And look, this AI story isn't just fluff. It's already hitting the bottom line. That OfferFit acquisition we just talked about, they expect it to add about 2 full percentage points to this year's revenue growth. So you can draw a straight line from their AI strategy right to their financial performance.
So, a great quarter, a killer AI story. What does that mean for the future? Let's dig into their guidance and what they're telling Wall Street to expect.
And here it is. This is the slide that poured fuel on the fire. They didn't just meet expectations. They confidently raised their full-year guidance. They're telling the market to expect more revenue and more profit than they previously thought. When a company does that after a big beat, well, that's a massive signal of confidence, and it's a huge reason the stock took off. Of course, it wasn't all sunshine and rainbows. The analysts on the earnings call started asking the tough questions, right? They wanted to know, how's that OfferFit integration really going? How are you actually going to make money from these new AI features? Are gross margins going to hold up? And the big one, what's the plan for that net retention number? When is it going to bottom out and start climbing again? These are the key things everyone is watching now. Okay, so that's the whole picture. Now let's talk about that big stock move. To really understand why a 16% jump is such a big deal, you have to look at the context. You have to see what was happening before this earnings report. Just look at this. Over the last year, while the S&P 500 was up 15% and the software index was basically flat, Braze was down a lot. We're talking down 27%. The stock had been left for dead, sentiment was terrible, expectations were in the gutter, and investors were clearly positioned for more bad news. And that's why this happened.
That 16+% pop came on 4 times the normal trading volume. This was a classic short squeeze and a fundamental re-rating all at once. It was the market waking up and saying, whoa, wait a minute. This isn't the company we thought it was. The narrative just flipped overnight from a struggling grower to a durable, profitable growth company.
Okay, which brings us to the final piece of the puzzle, the next call. This is where we put it all together. The numbers, the story, the market reaction, and give you our take on what comes next.
So here's our thesis, broken down into 3 parts. 1. For next quarter, Q4, we expect the momentum to continue. We're predicting another beat on both revenue and EPS. 2. The price action tells the story. This stock is no longer a show-me story. It's being re-rated by the market as a legitimate, durable, and profitable growth asset. And that leads us to number 3, our official rating.
We are officially rating Braze as outperform. Look, when you put together durable growth in the 20% plus range, a truly innovative AI strategy, and that critical turn to profitability, that's an incredibly compelling combination. We think the market was caught flat-footed here, and as this new narrative sinks in, there's more upside to be had. The big question, the one that could unlock the next leg up, is simple. Can they get that net retention number moving in the right direction again? If they can do that, this could be a real winner.
And just a reminder, this is not financial advice.